Everyone, it's Chris from Solstice ATR as well as Axel. You can find us on the website, Twitter, Instagram, Discord. And remember, we use this adaptive algorithm that's built by traders such as myself for range market, up market, as well as down market. The most important thing that in this week, the bears got whipsawed back and the bulls took over. So we had 2 weeks back to back, one down, one up. We have to pay attention technically for a couple of things that we have to keep an eye on. The transportation, the Dow Jones Industrial Average, the S&P 500, the Nasdaq, as well as the Russell. The most important thing here that we recovered between, the Thursday, Friday coming back up, as well as the dollar stayed strong in relationship to the VIX, which is the fear and greed factor, and we came back down from the $18 range back to the 15.45. The most important thing, we got to trade what we see. I'm using an RSI divergence here to show you an overall trend between the 1520 area and the 8085 area in relationship to a Fibonacci, which is 38, 50, and 61.8 Fib. The reason behind it, and we do use it 5 SMA, an 18 SMA and a 50 SMA to keep us in line. You can see this is on a weekly chart on the Fortune 500 companies. And in the Fortune 500 companies, we keep an eye when the 18 and 50 cross, we call it a bullish cross. Whenever we see the 18 crossing the 18, the 50 crossing the 18 from the top, we call it a bearish cross. The most important thing is we're going to pay attention to what we see on the charts, not what we think, and that's very important on the charts. So last but not least, once again, you can check us at Solstice, get in contact with us, give us your commentary, subscribe for the YouTube channel on weekly basis. It's for free. Let's go to the first. Taking a look at the S&P here, I put it up. And I put where the horizontal line from the COVID-19 till March 23rd low and the consolidation in 2020, the 2021 rally, the 2022 down move. We came back almost to 50%, the consolidation of the upper level in 2020. Then we rallied up. We had a double bottom in 2023 between the March and the January. This was the low in 1023, 1020 area. We rallied up on the weekly. We closed right here in December. The January was basically identical. We rallied up, but right now the 5 and the 18 starting to come together. But this week's candle, the engulfing candle that was coming, taking out all these weeks out, we tried to rally, but we didn't close right on it. So what I want to do is go to the daily, and I wanted to show this on the daily to show you where we really came to consolidation. And we rallied off. This was a January low, and this is the 328 high. If I do a Fibonacci, I want to show you how to look at it. And the reason behind it, I want you to pay attention to all these highs and lows every year and monthly and weekly so you can get a better idea. Look where we bounced off. This was a very technical trade. I was thinking, we're coming into an open cone or a linear regression downtrend channel. You can see the control point was from here to here. We came to this consolidation here. We can zoom it in. You can see that consolidation in this gap. You see this gap here? We filled 100% of this gap, and we reversed back up. Thursday was a down day. You can see the move up Monday, Tuesday, Wednesday. Thursday was a down move. And on Friday, we gapped up. So this is very important. Where did we come to? The 50 simple moving average. Let's now go take a look at the New York Fangs and NYFANG or the Mega 7 or the Mega 10. Oops. And FANG, or you can put the dollar sign. We can see in the New York Composite, which is the XLK or the QQQ or the Nasdaq 100. This is part of the Apple, Amazon, Google, Netflix, Tesla, and so on. Tesla reported was positive. Google reported was positive. Netflix was negative 2 weeks ago, and Meta reported came in negative. So there are opportunities to trade the tech sector, but you have to find levels when you trade what you see, not what you think. So if I look here from the January low to this high, you can see the retracement. We almost came to the 116 SMA in this big engulfing candle. We took part of it and we U-turned back up, and we got that big wick down and a move up in the Nasdaq due to the tech sector, other than Meta reporting, and we had the Friday rally back up. So this is very important to pay attention to it. Let's take a look at XLK. Okay. And we can see in the XLK, similar situation after the annual high of last year, we came to this consolidation. There was two gaps here. You can see them. And there's a gap here which never filled 100% on the Nasdaq between this candle and this candle. We filled a portion of it and we rallied back up on a linear regression down there, and we came to where the 38% and the 18 simple moving average. We missed the 8. We touched the 18. We missed the 50 Fibonacci from low to high. There's a 23% here. There's a 78% here. I don't have them marked. I usually mark the 50, 38, and 61. It depends if you draw from bottom to top or top to bottom. So that's on XLK. Take a look at I. In the bond sector, we can see that the yield this week, we got the Federal Reserve Board reporting. There is weakness in the bond, but this week's bond, due to the fact we went range bound up and down, and the bonds fell through on Thursday. They tried to rally, but you have 2 weeks of consolidation until the bonds rally above this candle and this gap here. I think there's more opportunity to the downside. The yield has not let go, and we'll see what the Feds do. The yield, which interest rate, the 2, the 3, the 5, 7, and 10-year, due to the mortgage around the 10-year rates. Short-term BIL, you can look at it for corporate short-term, loans for paying inventory, and, 30, 60, or 90-day term. Let's go take a look right now at Google. I want to show these things, what happened. We can see Google on this report, the prior report, we rallied, fell in, found support in the prior year, 2 years range, bounced off nicely. We had this big gap here. You can see it never came back to what we tested on the consolidation of last week, 4-week range almost in this area. We fell down, and all of a sudden, the report came in positive and rallied it up. We do have a big gap between here and here, but pay attention in case the market does turn south. I think the backside of this channel, this linear regression uptrend channel, I don't think it'll fill 100% of the gap. There's opportunity to buy and continue higher in Google. Let's show you Meta, which is Facebook, used to be known as Facebook, META. We can see in Meta, after the report fell very sharply on their numbers, we can see where the January low was and the high for the year. If I get that Fibonacci, we draw it from top to bottom, or the machine grab that little section. The reason why I want to show you this, when it fell down, it came either to the 38 or 61. Let's remove this. We'll do it the other way around so everybody can see, hey, that's a 61.8 fib. Why did it come out, instead of 38% fib, it came to 61. So from high to low, you can count 100%, 78, 61, 50, 38, 23, and so on to the top. When it fell down, look where it found support at the 116 simple moving average. Found that support, found the Fibonacci. Once it cleared it, go for the long. I think the 38% is in play. If you take the high for the from the year to this gap down, your 50% here in 38. That's a very important area to fill. Partial fill. I'm not telling you to go all the way to the 61% to fill 100% of the gap. If Facebook continues, we can see the 38 clear. If it clears it, you look for the 50, take some off, get out of the way. Just trade what you see on the charts. Look at LX, and I'll go to the Nasdaq 100 and the S&P. You can see when Netflix reported, it had that large gap here on the earning. Every time it had a nice gap up 2 times in a row. The numbers are great, but people didn't like, what the outlook is for the company in the following, quarter. It filled 100% of this gap. You can see it here and here. So this gap is filled. I consider this a triple bottom. If Netflix going to continue, has to clear 580 to run up. If Netflix cannot continue and it falls through that area, I'm thinking a partial gap will be here, and this is where the buy zone is in Netflix, not the 200 SMA. Either you can do a broken wing directional to the bull side or to the bear side. You can grab something in here in this area, grab something in this area to finance it towards the 50 and 61, and you do the opposite on this side if you're expecting it to go down. But if the momentum shifts and goes up, you do the opposite. You do two calls to one put, or you do two puts on the short side, one call on the upside if you think it's going to go lower. And that's how you basically trade equities or commodities at the same time. If you use options, and if you want to learn a little bit more, let us know. Let's go last but not least. I want to go the micro ES, and the reason I want to show these two on a sharper time frame, this is the S&P 500. We can see that the highs and lows for the year where they were, and if I draw a Fibonacci from the bottom to the top, I want to show where they are. And you can see on that move when we came back, we missed the 61.8 and the 116 SMA, but we had a nice U-turn back up on the daily, and we rallied up from that linear regression uptrend. This is a long-term channel. If you can see it, it's from 9, 15, 22, 7, 27, 2023, and we came back when we broke out of here. We consolidated a little bit, rallied up, came back down. Does this continue to create a shoulder, or rally and clear the 18 simple moving average and the 50 to continue high? But we do have a death cross. We got to see what the technicals are next week as well as Wednesday. This is on the S&P, the micro NQ, which is the Nasdaq 100, or you can use QQQ. Remember what I did in the last year where I showed these two gaps here, this gap here, this gap here. When we came back there out of that cup and handle, this is the V, this is the handle of it, rallied up, retested, rallied up, almost retested the breakout, continued on a grind up. Then we eventually fell to where? That area of consolidation and breakout, which was the 17,165. This was kind of a clue when it double bottomed in the last week's range, Monday, Tuesday, Wednesday, Thursday. Then you have the Friday. This was the Monday. This was the Friday low. We consolidated. We broke through the Friday's close, rallied up. Then we retested half this candle on Tuesday, rallied up. Wednesday, we did the look up, fail halfway. Thursday, we came down, tested the 116 SMA, acted as support, rallied up to where? The 50 Fibonacci and the 18 simple moving average. This kind of gave us a clue. Hey, here's my RSI. We had a downtrend channel. We broke out of it, tested the 50. Does the 50 continue to get to the 61, or do we fall back to the 38 before continuing higher? So we got to trade what we see next week. I'm going to show you how to use the measured move on intraday basis. Intraday, we're going to do I'm going to do 30 days, and I'm going to show you a 6-hour chart, and that would be basically getting a short video for the week. Please let us know how we can help you, because we're very technical in trading. You can see the prior week's range. We fell a little lower, tested, tested, tested. 1, 2, 3, 4, 5, and eventually broke down. So we got Friday, Thursday, Wednesday, Tuesday, Monday low. So we take, this is the Friday, this is the 19th. Do not touch the 19th. This is the Monday low to the high. So what I'm going to do, go get a measured move. From the measured move, I'll take the weekly high to the weekly low, and I'm going to extend it to the right, edit the property, and I'm going to go back in history to, let's say, 10. So that way we have enough room to show you where these levels are. In relationship to that, we can reversed 100% of the move back from the prior week, that big candle. If it's going to continue, my eyes to see if I do hold the 50 SMA and the 18 when they come to cross. If they cross and we're going to continue, the sentiment is bullish. If the sentiment is bullish after the Fed announcement on Wednesday, we continue to the 125, 150, 160, 180 to 200 usually is reversible. It can probably create a head and shoulder here. This is the cup. If it creates a handle here, that would be great. There's weakness on pursuit of an uptrust. There was weakness on that last candle on Friday after the push up. We retraced a little bit, but we closed on a positive node in the Nasdaq 100 for safety. So if I go now one more time to show you a little bit more shorter time frame, 15 days, and I'm going to go to a 30-minute bar to show you how things do work. On the short term, it's down, mid-term up, long-term up. In relationship to the open, high, low, and close in the pivot and my VWAP, if you see the target on Friday was 18,010. Where did we get to? We missed the 18 because of that short rally in the overnight. We consolidated, we created a shoulder, a head, and a shoulder, but we closed right above the 18 simple moving average. The most important thing, if we don't retrace part of this big candle here, we come back to this area. If things do come in, look for an opportunity U-turn till the Wednesday announcement. We go from there. If you have further questions, please once again get in contact with us at Solstice, give us a call, or send DM me on Discord and ask for requests. Twitter is the best way to reach out to me. I usually respond very quick. Enjoy your weekend. Take care.